Hi, everybody, and welcome to today's class. We're going to learn about credit card best practices for QuickBooks Online. My name is Jason Ruvault, and I'll be your instructor for today's webinar. We had to postpone today's webinar. It used to be yesterday's webinar. We had to postpone it because my internet completely failed, and I just didn't have it anymore. And it's tough to teach a webinar when you don't have any internet. I had to use hotspot on my phone to work, and would not have been a very good experience for anybody. So hopefully you all are all right with this. And for those of you who weren't able to attend, of course, you're not able to hear me right now, but you'll be able to watch this webinar tomorrow after GoToWebinar processes it and makes it available as a recording. And that goes for all of you too. Anybody who is here, you'll receive a recording of this webinar tomorrow, and that way you can review it as much as you'd like. And about a week or two from now, we'll probably also post it online onto our website. So before I jump in, I'm just going to go ahead and turn on my camera just so I can say hello to everybody. Oh, there we go. It's up a little high. Hi there. My name is Jason Ruvault, and I'm going to be your webinar instructor for today's webinar. I always like to turn on my camera for at least a couple of minutes just to make sure that you all know I'm a real live human being. I'm not an AI that we've trained to teach QuickBooks. I've got a lot of stuff behind me because I'm sort of rearranging my little office. But this is me. Hello, and welcome to today's class. I'm going to go ahead and turn that off so we can go ahead and get started. Now, I'll introduce myself really quick. My name is Jason Ruvault. Been a QuickBooks Online and desktop instructor for about 9 years now. I'm one of the people who helps design the training that's in the self-paced classes section of our website. I'm also the Diamond VIP administrator, and I manage a team of QuickBooks instructors. You might see us from time to time in the live Q&As. I help to arrange all of that and make sure that everything's running. That's kind of my job. So let's go ahead and get started. So this class, we're basically going to walk through from beginning to end how to set up a credit card, how to record the transactions that are related to that credit card, and then also we'll talk a little bit about the problems that people fall into. So naturally, the very first part is going to be setting up the credit card. There are actually two different ways to do this. I will talk to you about both of those. There's one that I prefer, and I'll specify which one of those it is, because the other version, it's sort of up to the whims of fate and Intuit, and I don't really like to do that. But we'll talk about both those options. We'll also talk about how to accurately record transactions. Now, when we talk about credit cards, we're mostly talking about credit card charges. You're going to get more of those than anything else. Those are situations in which you use, or somebody within your company uses a credit card to buy something or to pay somebody. So that's, again, the most frequently entered transactions. Important to know how to use those. But also credit card payments. Whenever you pay down a credit card, how do you record that? And there's a couple of different ways that you can do this. We'll talk about the most accurate way, but we'll also talk about other options that you have if you've done it in a particular way in the past, whether or not you should go back and fix those, that sort of thing. People worry about, those older transactions that you entered whenever you maybe weren't quite as used to QuickBooks Online. So talk about that. We'll also talk about this third thing that sometimes comes up. This is probably the least frequent, but in being the least frequent, it's one of the ones that gets the most questions, which is how to deal with refunds towards a credit card, and also how to deal with rewards and credits. There's actually a couple of different ways that you could record these, and we'll talk about your options there. Now, once we're done entering our transactions, we will then reconcile. This is something that you need to do every month, just like you do with your bank statement. The credit card company is going to issue you a credit card statement. It's going to tell you how much money you owed at the beginning of a reporting period, all of the transactions that transpired between the beginning and the ending of the reporting period, and then it'll also tell you how much money you owed at the end. So we will actually go through a reconciliation I will show you step by step how to do that, which is pretty cool because we don't have a recording or anything like that on how to record a credit card statement anywhere else, though it is very similar to a bank statement. And then towards the end, I'm going to wrap everything up by talking about common problems that people run into. One of the most common problems is using bills with credit cards, and it is a pet peeve of mine to tell people not to do that. And I'll discuss why, but we'll also talk about a couple of other little things that might throw you off if you're having any trouble with your credit cards. So that is today's class. Let's start from the very tip top, how to set up those credit cards. Now, naturally, I'm going to be using QuickBooks Online today. I use the Chrome browser, but you could use whatever browser you like. Chrome is just the one that Intuit recommends. Now, there are two different paths to setting up a credit card. The first path, and the one that Intuit really tries to push you to do, is right here through the banking menu. And note that the banking menu might also be called transactions. Now, it really all just goes to the same place, whether it's banking or transactions. QuickBooks just likes to call it different things based upon some of your answers to the questions you answered whenever you first set up your account. So whenever you click on banking or transactions, there is a way for you to link your credit card account to QuickBooks Online right here. You can click link account, and in the process of linking your account, you can actually create new credit card accounts. Now, it's a quick and easy way to do it. Not necessarily wrong to do it that way. The problem is that if you set up your account this way, there's no way for you to pick out a specific number to set up as your beginning balance. And the beginning balance is crucial in making sure that you've got everything entered for your credit card. And credit cards are actually pretty tricky to set up in terms of the beginning balances, because with a lot of beginning balances, you'll choose January 1st or December 31st of the previous year as the beginning date for that account. That way you can get everything in from the beginning of the year to the end of the year. You basically want to tell QuickBooks about a starting point for that account and then enter everything from that point forward. The problem is that with credit cards, unlike bank statements, credit cards can pretty much start or end in terms of their statement periods at any point in the month. Usually with bank statements, you start at the beginning of the month and then it shows you an entire month and then it ends at the end of the month. Credit cards aren't really that way. They just sort of they start whenever the account started and then they run into the next month on that same day. So you're not really going to get very, very often a credit card statement that starts exactly on January 1st. So it's tough to know what to bring in even whenever you go this route, because how far back do you tell QuickBooks to go? What numbers is it going to use to build that number, right? It's unpredictable. I don't like unpredictability. I like to know exactly what's going in, and I like to tell QuickBooks the exact number I want. So that's why I tend to not create accounts this way. Eventually, I then, after I've created the account, I link it, but I don't set up the account fresh that way. Instead, what I usually do, and again, that's why we call this class best practices, right? Usually what I do is I go over to the chart of accounts and I set up the account manually from here. Now, I've got a couple of credit cards already set up. You're going to notice them down here in the liabilities section. As it happens, I've got a lot of liabilities apparently. Let me look at it again. Maybe I don't have any credit cards in here. Oh, maybe I cleared them out in preparation for this class. I set up this company file about 2 weeks ago. I think that's what I did. So we don't have any credit cards in here right now. We've only got our bank accounts, which I will later on use to pay the credit card. So to set this up, I'm going to click New. And you have available for you an account type actually named credit card. Now, this is one of the few instances where QuickBooks makes the detail type pretty easy, because there is only one detail type. Credit cards are credit cards are credit cards as far as QuickBooks is concerned. Now, when it comes to the name, you can really name it whatever you want in terms of, whatever makes sense for you. There's no rules regarding a name. So for us, I'm just going to say that this is our Chase Visa credit card. And one of the things I often like to do is put the last 4 digits of the credit card right there in parentheses. That way, if I've got several credit cards, I can always tell the difference between them. You'll also usually catch at least those last 4 digits on the credit card statement. Usually it'll tell you the entire account number, but it'll be right there for you. Now, there are two trains of thought here whenever we set up a new account. One is to set up the account by itself. So this Chase Visa account is our credit card account. And it doesn't matter whether we have one card or 15 cards, they all go into the same account. That's the easiest way to do this. Some people, though, like to set up a credit card account, and then if they have other credit cards that are attached to that account that then feed into it, sort of contributing to a single balance, they like to set this up as a parent account and then set up the other credit cards as sub accounts underneath it. I don't really like that method very much, and I'll show you why in a little bit. So again, keeping with the theme of this class, I'm going to go with best practices. And in my opinion, the best practice is to just use an account. Doesn't matter how many credit cards you have. There are other, in my opinion, better ways to link transactions to other individual credit cards within that account if you want to go that route. I think there are better ways to do it than with sub accounts. So I'm just going to leave this the way it is. Now down here, this is where we pick out the beginning balance for this account. This is the starting point for the account. And it's important for us to get all of 2021, or if you're going back further, all of 2020 into your QuickBooks Online account. If you don't have the entire year, it's going to make running your financials a lot harder because, of course, you want an entire year there. That way you can use your P&L whenever you file your taxes and other things. Now, with bank accounts, again, pretty easy because you're going to have a very simple January 1st starting point for most of your bank accounts. But with credit cards, a little bit harder. Now, what you should do is find the credit card statement, the first credit card statement that you have that has transactions in it for the current year. So if we're getting started anew in 2021, we would find the first credit card statement that contains within it those 2021 charges. Now, it doesn't matter if the credit card statement started in December. That's fine. That's perfectly fine because we're still going to enter those December transactions too. So usually when you set up a credit card, you're going to go with other, and you're going to choose the first date of that credit card statement. Again, we're choosing the first credit card statement that contains anything in the current year in it. So for this credit card statement, let's say that the first credit card statement that has January transactions on it actually came to us, it actually starts in December. And the activity starts on 12/16/2020 and runs until January 15th, 2020. That's fine. We actually are perfectly fine entering this. Now, of course, naturally, there are going to be some transactions in here that happen in December. We're going to have to record those. And that's okay too. Those are going to be on the P&L for 2020, so they're not going to interfere with the 2021 books. And doing this enables us to start from that point. We have a credit card statement. It tells us exactly how much money we owe on this day. And I can go in and I can put that in right here. So all I have to do is look at my credit card statement. I'm going to show you a credit card statement in a little bit, and it'll tell you how much money you owe as of that day. So let's just say we owed $500 on our credit card statement beginning on 12/16/2020. Whenever I save and close this, and I scroll down here to look at my Chase Visa, which is right here in the credit card section, QuickBooks tells me that I owe $500 on it. Now, of course, that's $500 as of 12/16/2020. That's not necessarily how much money I owe on it right now. What I have to do from this point is enter all of the transactions that happen from this day forward. So I have to enter everything that happened in December from 2016, 12/16/2020 up until today. A couple of different ways you can do that. One, you can enter these transactions manually. I'll show you in a little bit how you can do that. Or you can, from this point, once the account is set up, you can go over here to banking, could also be called transactions. And then from this point, you would then link the account. And the reason why I like creating the account first and then linking it later is that now that I've entered my beginning balance, it's got the beginning balance set, and QuickBooks isn't going to download it again from my bank statement, which is what I want. I want to tell QuickBooks where to start and then take over with the individual transactions. So linking the account, super easy. All you got to do is click that, type in the name of whoever it is that issued you that credit card, and the login process is going to be a little bit different based upon the credit card that you were issued. Sometimes it's going to ask you for your username and your password, but you might also need to use like a two-step verification process with your phone. You may have to download a token, things like that. So it's going to vary by whoever issued you the credit card. Now, if you do a search in here and your credit card isn't supported by directly connecting it, it's okay. You can still go to your credit card's website and then download the list of transactions from them and then upload it manually as well. So I'm going to go ahead and close this. Now, before I connect it, I want to show you one little thing. I'm going to go back over here to my chart of accounts. Now, it could be that whenever you set up your credit card, or that whenever QuickBooks set your credit card up, it might not have set up the correct beginning balance for you. Or you might even see a $0 amount here. So before we go any further and add any transactions, let's talk about how to fix this beginning balance, because this is really important. I'm going to show you something. So eventually, what you're going to have to do is reconcile this account. And reconciliation is a process whereby you compare your credit card statement to what you have in QuickBooks Online. And those two things have to have the same starting point. Whenever you reconcile for January, you have to have the same beginning balance that you're going to see on that first statement. So you may have set up your credit card, you might see a $0 amount here, or you might see the wrong dollar amount. That's okay. You can still fix it. Just to show you the impact of this, whenever I click on reconcile and I go over to my Chase Visa, that's how QuickBooks uses that beginning balance. This forms the beginning of our very first reconciliation. That's how important that is. And so if this number is wrong, you'll really never be able to reconcile. There are a couple of different ways to fix it. For one, you can go down here to the credit card account and you can look at the register. And the register is where every transaction in a credit card goes. Same thing for bank accounts and really any balance sheet account. And you'll notice usually up at the top of the register, usually it's the very first transaction you'll see, you'll have something that'll be a credit card expense, and it'll be a charge for the dollar amount that you see there as the beginning balance. Or you might see nothing if you didn't enter any dollar amount for it. So this is where QuickBooks gets that $500 number. If I were to go into my reconciliation window and I've never reconciled before, QuickBooks uses this number as that beginning balance. So if I change this, maybe I was wrong whenever I first set it up and I want it to be $800 instead. If I save that, and then I go back over to the reconciliation window, go back over here to my Chase, I can see it changed here too. So QuickBooks gets that number directly from that beginning balance. So that's only the case if you've never reconciled. Okay, if you've reconciled between when you set the credit card account up and today, it's going to use a combination of all of the reconciled transactions together. This is only if you've never reconciled. Now, it could be, though, that this number says 0. And if this number says 0, that's probably because whenever you set up the account, you didn't put a beginning balance in. And so whenever you get into that reconciliation window, so I just deleted mine to set up the situation so you could see it. Whenever you get in here, it'll say 0. That's usually what that's doing. You know, you didn't set one up, and that's okay. Because if you didn't set one up, well, you can just add it in here. Super easy to do. All you have to do is click this button right here that says Add CC Expense. Put in the date of the beginning date for the first statement that involves January of the year. So again, you know, earlier we said it was 12/16/2020. So I'll put that in. We don't put a payee in. And then we'll put a charge in for the dollar amount that we owed as of that day. So it was 500. I'll put in $500. And then the account is opening balance equity. Everybody has an opening balance equity account unless it was renamed somehow. It could be that your opening balance equity was renamed to like owner's equity or something like that, but you'll probably find it here. Now, from here, I can save this. Now, just doing that by itself, if I jump over here to reconcile and I go to look for my account, I'm not going to find it. So what gives? I put that beginning balance on there. Shouldn't it show up? Well, it only shows up if you reconcile it. Now notice there's this little checkbox column right here, right? That tells you whether or not a transaction is reconciled or cleared or nothing. I just entered this, I didn't reconcile it, so it's not going to show up as my beginning balance. But if I click this little box right here until it says R, and then save it, I get a little notice that tells me I shouldn't do this, which usually you shouldn't. But in this one rare case, I'm going to do it. All right, so now this is reconciled, which means that whenever I go over into the reconciliation window and I look for my Chase Visa, there's my beginning balance of $500. So that's where QuickBooks gets that number. It's not only the beginning balances, but it's everything that has a little check mark in that, or an R in that check mark column. So they have to be reconciled in order for them to influence this beginning balance. But that's how to set up the starting point for an account. Now, the credit card statement that I'm going to show you later on is one that I got for a credit card that runs from the sort of beginning of March or the middle of March up until the end of April. So I'm actually going to start from scratch in here. I'm just going to go ahead and delete this so that I can start with a $0 balance. Okay, because if it's something that you took out in the middle of a year, you just wouldn't bother to put in any balance at all since you started at 0. So that's what I'm gonna do for our example. So I'm gonna go over here to banking or transactions, and I'm gonna download my transactions. I showed you earlier that you can link your account, but you can also download transactions from your bank or from your credit card company, and you can upload it from a file. So that's what I'm going to do, just because, again, this is a training environment, so I'm not really able to connect it to a real account. I have to fudge it a little bit. I've created a file that I can upload and put into QuickBooks that will serve as the basis for my transactions. So what I'm going to do is click Browse. And then, let's see, I've got a .qbo file in here. If I can find it. Oh, there we go. So there is my, oh, there's my Excel file. Is this my .oh, yeah, there it is. So I downloaded this from my bank. I'm just going to go ahead and select this. This is a .qbo file. Usually, you're going to get this file from your credit card company. You know, you'll only need to do this if you couldn't form a direct connection, or if you prefer to go in there and download it regularly, that's fine too. But basically, you know, every credit card website is going to be a little bit different. There's no one way for me to tell you how to download this, but I know with mine, what happened is I actually went into my account And I entered a starting date and an ending date for all the transactions that I wanted to see. It was called an activity page. And there on that activity page, it gives me the option to export my transactions to a file. I can download them to a file. You can usually download them to a PDF or to an Excel spreadsheet or to a CSV file. Or if you see it, always choose .qbo. If it's an option, choose .qbo. That is the absolute best way to go, because .qbo files are actually designed by Intuit. So naturally, they integrate pretty well when we're talking about Intuit products. So I'm going to select that and then click Open. And from here, you just have to choose which account you want to attach this to. So that's what I'm going to do right here. I'll choose my Visa. All right, there we go. So now we need to accept our transactions. And whether you formed a direct connection or whether you downloaded the .qbo file, either way, your transactions are going to end up right in here in banking or transactions. If you've got multiple accounts, you may have to click this drop down arrow and choose between those accounts. So I've got one right here. That's my Chase Visa, but I could switch back and forth between other ones that I've got too. So I'm going to switch over to my credit card account. And so this is where we see a list of our transactions. Now, it's really important here to remember that just connecting the account to QuickBooks Online and just downloading the transactions into QuickBooks Online isn't enough to populate your reports yet. Because what happens is everything that you download goes into this section, and this is basically a waiting room for transactions. This is where transactions just sort of sit around. You know, they're leafing through magazines, they're sitting in their chairs, they're waiting for us to tell them which room to go into. So while they're in here, they don't count towards anything. You have to take an additional step. And the additional step is to tell QuickBooks more about what these transactions were for, and then add them in. Now, you don't have to use this process. If you want to, you could go up here to the New button and choose Expense. And you can manually do this. So if you chose not to download transactions, you absolutely could do this. You can just type in the name of you can type in the name of whoever it is you paid. You can put in the account that you used to pay them, so a credit card. You can put in the day you paid them. So put in that. The payment method doesn't really matter too much, but you can put that in too. We'll just say, pay them with a credit card. And then down here, you would enter whatever it is you paid them for. So I will just say that this is maybe for some advertising. They did some translating services for us. And then you put in the dollar amount and enter any other details. So if you've got a nice description to plug in there that you want to see on reports later on, if this is for a specific customer, you can enter that too. If you have a receipt, you can upload it right here. And when you're finished, you save and close it. And that records the expense. So you can do that for every one of your individual charges. But the problem is that, as you might suspect, that actually takes a lot longer than downloading the transactions and entering them, through the banking and transactions menu. So while it is possible for you to do that, it is not the best practice in most cases. Now, if you've done that in the past and you've entered those, those transactions in the past that way through the expenses menu, that's okay. Because what happens is whenever you connect your account to online banking, if you've already recorded something, Manually, QuickBooks downloads it, looks through your history, and it matches the downloaded transaction to the one that you've already recorded. Notice that that here in this window, it used to not have anything here for a match. It used to have add right in here for this transaction, right? But now that I recorded it manually, so I recorded it as an expense, now QuickBooks looks through my history and it looks at that transaction that I downloaded on 4/21/2021 with Atlanta's translating services for $288.24. And it says, oh, Jason already entered that. So what we need to do now is match this downloaded version with the version that Jason entered. So that way it doesn't get counted twice. In some cases, you might see multiple matches. If it's a common dollar amount, like $50 or $29.95 or something like that, you might see a couple of options over here, and you can choose between those multiples. Just choose the one that matches the most criteria. So if you see like multiple options, but like one of them has a date that's closer to the downloaded transactions date, choose the one that has the closer date, and you'll usually get it right. Whenever I click, or you can click on find other matches to find something else. But usually these are pretty straightforward. Whenever I click match, that just matches up with the transaction that I already recorded. Make sure it doesn't get counted twice. Now, if you are going to use this window to record new transactions, they're not going to be matches. Matches only happen if you've already recorded something. And if you're using this window, you really don't have to record anything manually. You can just use this window by itself. And that's usually the best way to go when we're talking about credit card transactions. Credit cards download really well into QuickBooks Online. There are a lot of good reasons to not use online banking for debit cards and for bank accounts. Main reason being deposits and how it's sometimes a little bit hard to match up deposits with customers. Well, with credit cards, it's really not really the case because it's mostly you spending money and then occasionally you paying off the credit card, which I have right in here. So these are usually pretty straightforward and good to enter, everything through this menu. Now, we've got a couple of transactions in here that were downloaded from our credit card. This is a credit card charge, which we spent $7, right? And what we see down here in the bank detail, and it calls it bank detail, even though it's not a bank, is usually the name of the vendor. So whoever you bought something from. It also might have other details in there, like ID numbers. It could also have the date in there, but it's basically just information that's sent over from the credit card company. You'll also see the same detail that you see in bank detail in memo, but you can type over the memo with whatever you'd like. Now here for the payee, put in whatever vendor this was with. If it's a new vendor, you can put in their name. Or if it's just a category of vendors, like, we've got Craig's Gasoline. We go there a lot, but, we also go to other convenience stores to buy gasoline. So we probably don't want to enter each individual one as their own vendor. What I would do is just put in convenience stores. That way, anytime I buy something from a convenience store, I'll just put it into this one sort of catch-all vendor. So that way it'll catch those transactions and this it's like one term, so I don't have a ton of different vendors on my vendor list. So the category, QuickBooks is going to take its best shot, but let's be honest, it needs a lot of help. In a lot of these cases, it doesn't have perfect information to work with in terms of these other spots. Category is just where we tell QuickBooks more about whatever it is that we bought. So QuickBooks knows that we spent $7 and it knows that we spent it with somebody called Craig's Gasoline, but QuickBooks is just a computer program. It doesn't know what gasoline is. It doesn't know who Craig is. And, it's just saying, hey, cost of goods sold, ? It doesn't really know, but we do, we hope. So this is where we fill in the details for QuickBooks and tell it what this was for. Now, some of these are going to be pretty obvious. With Craig's Gasoline, well, it's gasoline. So we'll put a fuel expense account in here. So automobile fuel, or you usually just have an expense account called fuel. We'll put that in there. And that'll increase the balance of that fuel expense account so that we can see how much money we spend on that thing. Now, for the customer job, if this was for a specific customer or project, I guess it says customer project, we can put that in here. This relates to job costing, so we can track how much money we spent on a particular thing with each one of our different customers and projects. This is really important if you need to measure the profitability of the things that you're doing. Now, and this is not the case for us, we just bought some gasoline. Now, I want to direct your attention to this, tags. So tags is incredibly broad as a feature. There's really not a whole lot that it can do that other things can't do. You know, if you're talking about different departments within a business and different locations, well, I would usually use class or locations to enter that data. If I'm spending money on a particular project, I would use the customer project field because those are fields that are built for that data. Tags are for basically anything that doesn't already have a field, okay? Now, you don't have to use tags, but there is a really cool thing that you can use tags for. And this is something that I've worked out over the past couple of months. I guess maybe a year or so since tags came out. You know, earlier I mentioned how it's usually best practice to just have a single account for your credit card account and just download everything as one account. But people still want to track, you know, which credit card was used on particular transactions. So one of the things I have found to be really useful is to use tags to track which credit card for an account was used. So if we have 5 credit card accounts attached to this credit card, I can use tags in here to put in, you know, the last 4 digits of that particular credit card, or maybe the name of the person who was issued that credit card. So I can enter that right here. And then I can also run reports later on that tell me which credit card that, you know, which credit card was used in particular transactions. If I were to look at this transaction later, I can see that number on there. So QuickBooks collects that data and keeps it for us. So that's a nice little way to use tags. But I'll show you the alternative later on with the actual parents and sub accounts and why it can sometimes lead to problems. So once you filled out all the details for the transaction, you add it in. That puts the transaction into QuickBooks, increases the balance of the credit card account, and also increases the balance of your expense account. We can see the effect of this if we go to our reports. The report that I want is the profit and loss report because that's where all of our expenses goes. And the fuel expense account is naturally an expense account. It says it right in the name, right? So I'm going to run my profit and loss, and I'm going to look for fuel. So there I've got the number for fuel. This is how much I've spent on fuel so far this year. If I click this number, I will see that $7 transaction that I just spent on the Chase Visa. Now that's one side of the transaction. As we know, QuickBooks Online is a double entry accounting system. So if I'm increasing the balance of one account, I also have to have increased the balance of some other account. And the other account that I've increased the balance of is going to show up on my balance sheet. And whenever I run my balance sheet, I can see the current balance, at least according to what QuickBooks has, and what QuickBooks has is not completely accurate, but we'll get to the bottom of that. The other balance is in my credit card account. So if I go down here I've got my Chase Visa. Notice that my balance is $847.95. That's because it's the combination of that transaction with Alana plus that fuel purchase. So it comes out to $847.95. That's why I see a little bit of a larger number than just a little bit than just that fuel expense. So every time I enter a new purchase, this number goes up. And that's just what charges do. They increase the balance of that credit card account. I'm going to go back over to banking. This could also, again, be called transactions. So we know that these spent transactions increase the balance of the credit card. Right here, I'm going to put in auto mechanics. I'm going to put in BIM just to show you again. Put in auto mechanics. I'm going to enter them as a vendor. And this is for repairs and maintenance on automobiles. Again, if you've got a number for the credit card, you can put the tag in, or you can leave it blank if you decide not to do that. You can assign a customer, you can make it billable. And whenever I enter this, it's going to bring my credit card balance up by $101.94. So that whenever I go over here to run my balance sheet, it will again be $949.89. So it went up by that $100 and some odd cents number. So that's what brings our credit card balance up. Let's go back over to banking or transactions. Now, we know what makes this go up, the spent transactions. But anytime you pay off your credit card balance, it makes it go down. Now, right here, I've downloaded something from my credit card that says I received money. Now, that sounds a little bit weird coming from a credit card account because you don't really receive money into a credit card, or at least we don't conceive of it that way. But that kind of is what's happening whenever you pay off a credit card. You're basically performing a transfer from your bank account over to your credit card, or maybe you're writing a check to pay down the credit card. Either way, it's going to show up on the credit card side as received. So this credit card received $107.34. Now, where did that come from? Well, I'm going to switch back over here to my bank account and then open it up. And I'm going to look for a transaction that's similar. Yep, I see it right here. On this side, from the bank account's point of view, we spent $107.34 right there. So I'm seeing this transaction on both sides, both from the point of view of the bank account and from the point of view of the credit card. Now you can start this process from either end. It doesn't really matter which one. I prefer to start from the bank account side just for consistency's sake, but you can choose either way. Now notice that whenever I look at this transaction from the bank account's point of view, it's telling me that this is a transfer to an uncategorized asset. Now that's absolutely not true. This is a credit card payment. We're paying off the balance of that credit card. So what I need to choose up here is record as credit card payment. Now, if in the past you've recorded these transactions as transfers or as categorized, that's okay. So if you use transfer and you clicked in here and you found your credit card account, I'm just going to type in the name, and then you recorded the transfer, that's all right. You don't have to go back and fix anything because ultimately the accounting is going to work. It's going to decrease the balance of your bank account by $107.34. It's going to decrease the balance of your credit card too by that same dollar amount. But the reason why this credit card payment and categorize, but preferably credit card payment options are better is because we can add more details. So like if I go over here to categorize, notice that I have a lot more stuff that I can enter here. The category is still the credit card that I'm paying off, but I can put the payee in here. So the name of the financial institution that issued me the credit card. I can also put a tag in if I want to. Now, usually whenever you pay off a credit card, you're not paying off, whenever you pay off a credit card account, that is, you're not specifically paying off one card at a time. So you probably wouldn't need tags, but you could enter one. You could also enter a memo, a custom project, which you probably wouldn't do with a credit card payment, but you've got more options. And this shows up fine. It shows up as a transaction with a payee the way that it should. The preferred method to do this, though, is record as credit card payment because It reduces the number of fields, so you don't have as many places to make an error. And also, if you were to go and run reports and you just want to see credit card payments, it's a lot easier to do a filter just to see this type of transaction show up on a list of transactions. So I'm just going to put in the vendor here. I'm going to say that this is towards Chase. All right. And then I'm going to add this in. And that is going to lower the balance of my bank account. So we would see bank accounts balance go down, and then we'll see also the Chase Visa go down. Now notice that as soon as I enter it for the bank account, though if I started with a credit card account, it would work here too. Notice that this downloaded transaction in which we received $107, it no longer says add. It says match now. Because now QuickBooks sees that thing that we recorded manually, or the thing that we downloaded from the other account, and it's matching this transaction against the other side. So it will not count it twice. Basically, it's like a handshake. It's confirming that this has really happened. Whenever I click match, now we know it doesn't get entered twice. Now and just to show you the result of this, I'm going to go back over here to my balance sheet. Because remember, those charges were bringing up the balance of the credit card. And now whenever I go over here to look at the balance again, still $842.55. It went down by the amount of that payment. Now, for some of you, this may feel like you're paying the same expense twice. Naturally, didn't you already, make a credit card charge and, record that? Like, why do you have to record the payment separately? Well, every time money changes hands in the real world, we have to record it in QuickBooks if it involves a credit card or a bank account that's attached to our business. The expense was entered on the original charge. That's where the expense account is. Whenever we record that transfer, I'm going to go back over here to my credit card payment. So this transaction that we see right in here, this is my credit card payment. If I click on more and then transaction journal, I'm just going to show you the breakdown in terms of debits and credits for this transaction. Basically, what's happening is the checking account is being credited, which means that it's going down, and the Chase Visa is being debited, so it's going down too. So no expense accounts are involved here. The expense accounts are on the original charge. So we're not recording it twice. Because you might have a $50 charge and then a $60 charge and then a $70 charge, but whenever you pay it off, it's all one number, right? So the expenses go on the individual charges, and this is us just paying down the balance. So we do not record these expenses twice. Now, we've got other types of transactions in here as well, but before I get there, I just want to point out that even if you don't use online banking to download transactions, you can still record this transaction, this paying down of a credit card. Notice that over here under Other, there is something that says Pay Down Credit Card. If I click that, brings down the menu, and I can enter this manually. So I can choose the credit card, choose the name, how much money we paid off, what bank account we used. And if this was a check, I can also enter the check number. So that's perfectly fine as well. So the next thing that might affect your balance could be credit card credits. Now, credit card credits come about because you return something that you bought with a credit card. In those cases, you'll also see a transaction in here that says received. And if you see something from the point of view of the credit card in which you received money that's a refund, what you would do is select it and then choose categorize. Because whenever you receive money on a credit card, QuickBooks thinks that this is a transfer. It thinks, oh, you're paying off your credit card. But if you're receiving a refund, you need to categorize it, choose the vendor or the payee that you originally paid with the credit card. And then for the category, choose the same category that you entered whenever you entered the original purchase. So if I paid auto mechanics $500 and then he refunded me 100, earlier I used the automobile repair expense account. Whenever I see the refund, I would also use the automobile repair account, because what the original charge does, as we saw earlier on the profit and loss report, is the charge increases the account balance of that credit card. Well, whenever you receive a refund, if you use the same expense account that you did on the original expense, it lowers the balance of that expense account. That way I can go and run a profit and loss report and I can see the positive from the original charge, and then I can see the negative as the refund. So that's only something that you need if you get refunded on this card. Now, and you're downloading it. But if you're not downloading it, if you want to enter it manually or your credit card doesn't support this, you can select New. And notice that there's an option on here called Credit Card Credit. This is what you use in those rare situations where you get a refund to your credit card. This is basically the opposite of an expense. You enter the payee who gave you the refund, the credit card into which you received the refund, the date that the refund happened, and again, you would enter a category that best describes whatever it is that they originally charged you for that they are now refunding to you. Now, whenever I've talked about these refunds to credit cards, I've gotten the question, well, if it's a refund, why doesn't it involve your bank account? Well, usually whenever you're refunded to a credit card, it simply lowers the balance of that credit card. It never actually hits your bank account. It just goes back into your credit card and pays off and brings down the credit card balance. So since it's not going into your bank account, there's no reason to have it affect your bank account. Naturally, it'll kind of have an effect on your bank account because you won't have to pay as much on the credit card later on. So, in a way, it saves you from spending money later on whenever you pay off their credit card, but it's not going to actually hit your bank account or show up on your bank account. So you don't really need to enter anything banking related on it. So this is how you would record those credit card credits manually. But again, if you're using online banking, you can just download them and they'll show up as received. And QuickBooks will usually think that they're transfers, but you just have to step in and tell it to enter them as categorized instead. The other situation in which you might see something as received is a use of rewards or cash rewards or something like that from your credit card. So if you're using points to purchase something, they could show up in one of two ways. One is they could actually show up as received. So you might actually see a credit show up here for the redemption of those points. And that's okay if they show up this way, because again, we would choose categorize. And for the vendor or customer, we would actually put in Chase. And then for the category, you would put in a other income type account called credit card credits. Now, you might not have one set up. Actually, I'm not going to call it credit card credits. I'm going to call it credit card rewards. That's a better description. So if this was a downloaded reward, I would choose other income, and then other miscellaneous income as the detailed type. I would call it credit card rewards, and then save and close. And so if I'm redeeming, this is a lot of points, a lot of rewards, right? But if I'm redeeming $618.75 worth of rewards, this is going to bring down the balance of my credit card by that amount. So if I add this and I go over here to my balance sheet, I can see on my balance sheet that my credit card balance went down to $223.80. And then if I go over to my profit and loss statement, I can actually see in other income the amount of basically savings that I've had from credit card rewards. Now, however, that is often, at least in the cases that I've dealt with this, that is often not how it's displayed. If it shows up as a line item on your banking transactions, that's great, awesome. But and I'm speaking from experience here because I actually use I use an Amazon credit card for business purposes, and when I use points on that, what it does is I actually redeem them at checkout. So it actually takes out the amount of money that I redeemed. So in those cases, they're not actually going to show up as a line item. What happens is the business that you made that purchase from, there are rewards assigned at checkout. So like right here, I've downloaded an Amazon transaction. Maybe what this really was a purchase of a $100 expense, $100 purchase. But I used what is it, $41.20 worth of rewards to offset the price. So what's going to happen is here, Amazon's just going to show me the net. So you can just add this in as the net if you want to, and you can put in the category, even though the purchase was for a $100 thing, you can put in the net. And that's usually fine. The only time when it wouldn't really be fine is if you're purchasing an asset, in which case you might want to get the original purchase price of the asset in. Now for this one, if I was insistent on getting those rewards in, what would be, I would make sure to put in a proper category, but instead of doing it through this window, I would click split. And so this is where I can enter a positive number and a negative number for the credit cards redeemed. So let's say that I bought something kind of big, maybe I bought something that I want to track as an asset. So if I put in, I don't know what I could buy. Well, I'll say it's for a little bit larger of a dollar value. I'll say that this is the like an Android tablet that I'm purchasing. And an Android tablet would be a fixed asset computer. And I'm going to say that it was $300. Now, maybe I used $241.20 worth of rewards to help me purchase that. That way, only $58.80 actually got charged to my credit card. What I would do is enter the full value of the purchase and then a negative number for the credit card rewards. So I'd put in negative $241.20. And then over here on the right-hand side or left-hand side, I would again put in credit card rewards. So that way, the net is affecting my credit card balance, but the full asset value goes in, and my credit card rewards go in too. So this is what you do if you want to see the credit card. And again, you don't have to do this every time. You could just put in the net in most situations. And that would be fine because that's what your P&L is going to show you eventually anyway. But if you want to get that detail, if you want to see those credit card rewards and QuickBooks doesn't download them individually, you can offset these transactions with rewards. And if I apply and accept this, I can see multiple effects of this. If I go to my balance sheet, I can see my $300 Android tablet, which is entered for the full dollar value. I can see that my credit card, the balance went up by those $58. So it didn't go up by $300, which is good. is the net of the transaction. And if I go to run a profit and loss report, I can see my credit card rewards. So it shows a combination of the one that I downloaded and also the split that I put into the transaction earlier. So, again, you don't have to go through that many steps in every case, but that's what you can do. So what I'm going to do is enter all of the transactions that I have on my first credit card statement through this window. So I'm gonna add in a whole bunch of transactions pretty quickly. We've already covered how to enter these transactions, so we kind of know at this point what to do. So I'm going to enter some of these pretty quickly. So this is a credit card payment, and I'm just doing this to set up my credit card reconciliation. Put in Chase. Okay, and then Craig's Gasoline. Notice, by the way, that this new transaction from Craig's Gasoline, notice how QuickBooks puts in the convenience stores and automobile fuel automatically. That's because as you enter transactions, it starts to learn from your actions. So it sees that whenever that bank detail says that, it then needs to put in the convenience stores and automobile fuel. So it'll actually start entering those transactions for you, and they show up in green if it's something that QuickBooks recognizes. And you kind of get to a point where you can just add those in. In fact, if you want to give QuickBooks a little bit more control, and I don't always advocate for this, but in this case, if it downloads something from Craig's Gasoline, we can tell QuickBooks to not only assign an expense account to it automatically, but also to automatically add it. Now, sometimes this causes a little bit of trouble because maybe we buy, I don't know, travel meals from Craig's Gasoline or something like that. Like we pull in, we buy some burritos or some nachos or something. I don't know. In that case, we may not want it to go towards fuel. But if you add this in as auto add, I'm going to show you what happens. I'm going to go ahead and create a rule. QuickBooks automatically records all of the other transactions from Craig's Gasoline. It just puts them in. We don't even see them anymore. And, maybe that's good, maybe that's bad, I don't know. But sometimes it does get people into a little bit of trouble. So be careful with that auto add. QuickBooks wants you to do it, but it's not always the best thing to do. Whenever I go over here to categorize, by the way, I can see which ones were automatically added. And if something is in here in the categorize, that means that it is affecting your books. It's affecting your credit card balance. If you make a mistake when you record anything, you can always go back over here and click undo, and you'll see it pop back over into for review. So you can change details about it and then add it back in again. By the way, also, if you see lots of transactions in here that are set up correctly and you want to add them in, you can also check off the check boxes right here and click accept to bring those in too. That's a pretty fast way. And in fact, if they're all right, you can just select this little checkbox right up here and accept those too. But again, be pretty careful, because if you're seeing anything in here with like uncategorized expense, it's kind of a red flag. You really don't want transactions to ever say uncategorized expense. Whenever you go to run a profit and loss report and you just see uncategorized expenses, that's usually not a good thing. I'm going to put in office supplies. Now, usually whenever you make purchases, there'll be expenses of some kind. So I'm just going to put in office supplies. And just to make this speed up a bit, I'm going to add in several of these Amazon transactions in here. Now, if you see any transactions in here that you don't want, you can exclude them. So you can always check off this little box and then choose exclude. But here's the problem. excluding is usually not the right thing to do. And I know it's tempting to use it, especially if you're dealing with personal transactions. So, like if the owner of the business takes the company credit card and buys something for themselves or pays one of their bills, the temptation is to exclude it. But that's not the right choice. And the reason why it's not the right choice is that this transaction, if it was downloaded from the credit card or if it appears in a credit card statement, that's going to show up later on the credit card statement. So whenever you go to reconcile, you've got to have that in your books or you'll never be able to reconcile. So even if something is personal, we still have to add it. Now, the difference is that if something is personal, like for instance, this Cheesecake Factory transaction, right? So if we download this and this was the owner buying some meals for themselves, in here for the category, instead of using an expense account, they'll use an equity account. Usually on your somewhere on your chart of accounts, you'll have owner's draw and also owner's contributions, or you might just see owner's equity. So there's a variety of things that you might see in here. The important thing is that you use an equity account because equity represents the value of the business to the owner. So if they're spending money from the business's bank account or making credit card charges, if they own the business, that's kind of what they get to do. And that's okay. There's nothing wrong with that. It just has to be categorized correctly as them taking out value of the business and applying it to their own personal needs. Now, usually people would put this into an owner's draw account. Most chart of accounts have an owner's draw account. Some businesses like to split it off and put it into a different equity account named owner's personal expenses. Personally, I don't think that you need to go into that great of a detail, but you might see it appear from time to time that way. I just put it in an owner's draw. That's them drawing value out of the business. You'll usually see one of those on your chart of accounts. We add that in, and it puts it in QuickBooks. And the best thing about that is that because we use an equity account, that's not going to affect the profitability of the business. So that's not going to show up on the P&L whenever we send that off to the accountant or go to file our taxes or anything like that. It's going to go onto the balance sheet and show up as an equity draw for the business's owner. So it's exactly what we actually want. Now, for us, our credit card statement, and I'm just going to go ahead and show you the credit card statement over here. Okay. So credit card statements, they vary quite a bit from credit card issuer to credit card issuer. Now, for us, we use Chase, and the way that Chase displays this is they actually show how much money you owe right up here at the top as the new balance. So, and then they show the minimum payment and when you need to pay that by. Now, as you scroll down a little bit, it will then show you a total for all of the payments and credits. And so that's the amount of money that we transferred from our bank account over to our Chase account to pay off the credit card. And it'll show you all of your charges. And whatever the difference is between those two things, that'll be the new balance. So that's what we owe. Now, of course, we don't have to pay all of it, or well, in some cases you do, depending upon the credit card issuer. But with our Visa, we don't have to. But best practices with a credit card is to pay it off every single time you get it. That way they don't charge you interest. Now, it tells us about our available credit, cash access line available for cash. None of these things need to go into QuickBooks. QuickBooks doesn't care what your maximum credit line is on the credit card. All QuickBooks cares about is what charges happened, what payments happened, and then it'll show you the difference between the two. So it doesn't need all of this. It only needs these payments and the charges. And the payments and the charges are what we're entering right in through here. So as we add these in, we're mirroring the same things that we will eventually see on that credit card statement. Now I'm going to go ahead and add in all of the transactions. I'm just pausing my screen right here and clicking in all the transactions that will later on appear on my credit card whenever I go to reconcile it. Okay, so I've got all the transactions in for the statement period on my credit card. And I just want to show you the statement a little bit. So the statement tells me about all of the activity between two dates. So it's telling me between 3/14/2021 and 4/13/2021. So it's saying that as of 4/13/2021, I owe $102.34. Now I made payments throughout the month to pay down the credit balance because my credit balance is $1,000. So I spent a lot of money, so I had to pay that down. That's okay. You can have multiple payments. Now to start a reconciliation, you first have to have your credit card statement. Number one, right? That's outside of QuickBooks. You have to go and get that. And you're either going to get that by logging into the credit card website. You might have it set up to have them email it to you or send it to you through mail. Either way, you need that. You got to have it. You can't reconcile without that. Best practice, print it out. Have it, like, sit it next to you. Have it within arm's reach and get a highlighter. And as you work through a reconciliation, you can take out that highlighter and you can highlight all of the things that you have confirmed in QuickBooks as you go through it. Now, I'm going to go ahead and reconcile. And in order to reconcile, you have to have all of the transactions entered from the reporting period. So I mentioned earlier that statement was from 4/13/2021 to 4/13/2021. I have to have all of my charges and all of my payments entered that happen within that date range. If I don't, I'm not going to be able to reconcile because you're really just confirming everything that happened in that credit card account according to what's on your bank statement. I hate it. How does that? Okay. So my beginning balance was 0. And you can see that on a credit card statement where it says previous balance. That's what that beginning balance is. So ours was 0, and it matches up with what we see on the credit card. Now the new balance, this is the ending balance, is $102.34. So that's what I put right in here for the ending balance. And then the ending date is the last day in the period. So opening closing date, that's the beginning. This is what QuickBooks wants. This is the end period. So 4/13/2021. All right. It doesn't care about the beginning the beginning period, because what happens is the next time you go to reconcile, QuickBooks knows that this is the beginning of the next statement. It'll actually be the day after this. But it understands that because one reconciliation picks up where the other left off. Now, if you're reconciling for the first time, again, that beginning balance comes from the beginning balance that you entered whenever you set up your account. You always need to start with the earliest statement for the year. For us, we took out our credit card in the middle of the year, so that's why we're reconciling for March and April 1st. But most businesses will need to start with a January date in here as the ending date. So we're going to start reconciling. Right. Now this window is going to show us, and in fact, we're already looking pretty good. So this window is going to show us all of the individual transactions right here at the bottom of this window. And those are the same ones that we'll see on our credit card statement. I'm going to move over a little bit of the credit card statement here. I'm not going to show all of it. I'm just going to show the dollar amounts, just because it would be tough for me to show the names of the people that we bought them from at the same time as everything else. So these amounts that we see right up here, these are the payments and the credits. And then as I scroll down, we can see the individual charges all listed. Now, if I were to look at the entire thing, I would, if I were to bring this over further, you could see the individual charges, but it's a limitation of using monitors to teach. I can't show you the whole thing. Okay. All right. So I can see my payments in here. And I can see them in QuickBooks too. So there's my payment for $618.75. I can see it on my statement. There's another payment for $401.22. There's $881.95, right? So we see those on the statement. And the charges are on here too. So here's one for $16.23. There it is right there. I've got one for $373.80. I see it right there. So basically what I would do is if I have this printed out, I would highlight each one of these things as I confirm them in QuickBooks. Now, here's the cool thing about using online banking. Notice that whenever I get into this window, everything is already checked off for me. And the reason that is because I'm using online banking. Anything you add or match through online banking shows up here as pre-reconciled, which is called cleared. And you can tell that because it's got these two little green boxes right here. Notice this is manually added from bank feeds. That tells me that that came from the bank, or it came from the download file that I put into QuickBooks. So big advantage to using online banking because QuickBooks trusts these transactions. It puts little check marks to them. If I hadn't done that, if I had just added them manually, I wouldn't have any of these things checked off. I would have to go through here and one by one check them all off. Ideally, what happens is we get into this window and our job's already done, which is what I just did. Again, class about best practices, right? I implemented best practices. I get into this window. I didn't have to do anything. And I have a $0 difference between the bank's records and my records in QuickBooks. Now, if you have a problem, if you don't see a difference of zero, even after you work through all of these transactions, there are a couple of tactics that you can take to help you figure out where the difference comes from. The first thing to always look for, if you're not getting a difference of zero, is the charges and the payments. And that can help you to narrow down where the problems could be. Because QuickBooks gives you a total, or the statement gives you a total for these two things. Right on here, if you look at the account summary, you can see here on the statement, payments and credits, and that's the same thing that I have in QuickBooks. Purchases, it's the same thing that I have in QuickBooks. The statement is my source of truth. This is what I want to be in QuickBooks. If something in QuickBooks is not the same as what's on the statement, that means that there's something wrong in QuickBooks, and I got to fix it. The statement is always right. QuickBooks should reflect what's on the statement. So if there's a difference in any one of these numbers, we then have to look at the transactions that make up those numbers. Anything that falls into the payments section is in that payments column. So if I uncheck this box, notice that it changes the payments number. If I uncheck this charges box, notice that it changes the charges. So that gives me a little bit of direction. If I see that any one of those numbers are off, that narrows down the transactions that I then have to look at. With a credit card, it'll usually be the charges because typically businesses make a single payment towards their credit cards. It's usually not the problem. It's usually with the charges. And so then it's time to go through, if there's a problem, if there's a difference, it's coming from either one of these transactions being the wrong dollar amount. And when I say wrong, it means that, what we have in QuickBooks is the wrong dollar amount. I need to go and get the real dollar amount from the credit card statement. It could also be that there is something on the credit card statement that I don't have in QuickBooks. So that way it naturally wouldn't be on this list. So, it wouldn't be checked off. So I have to add it. Those are easy to put in. If you go to new and then expense, you can put in credit card charges. Or if it's a credit card payment, you can choose pay down and credit card. And they'll pop up right here in this window so you can check them off and make them contribute towards the reconciliation. It could also be that a transaction isn't checked off that should be. So if you see something on your statement and it's not checked off here, that's going to cause a difference by the amount of transactions that aren't checked. So those are the main places where you'll see a problem regarding a credit card reconciliation. The last problem that could come up during a reconciliation is perhaps the statement ending balance or a date were entered improperly. In the screen, it can be a little bit difficult to figure out how to change those and correct them, but that's what you do from the Edit Info button. If you click that, out pops this drawer, and I can change the ending balance if I want to. Maybe I made a mistake and I put in the wrong dollar value. Maybe I put in the wrong date, so it's not considering anything that happened after that date that I needed to. That can cause a problem, but this is where you can fix that. Now, if you're to this point and you've got a difference, it's a couple of cents, and you don't want to deal with those couple of cents, you can choose Finish Now and have QuickBooks actually accept the difference, and it'll make a journal entry to either bring up or down your credit card balance by the amount of the difference. So that way it basically forces your credit card balance to be correct. Obviously, you don't want to do that very often, but if it's off by a large amount, rather, if it's off by a small amount, you might want to think about doing it. Because to be honest, if your credit card balance is off by like 4 or 5 cents, and it would take you a couple of hours to figure out where that 4 or 5 cents is coming from, I would accept the difference, just being honest. Because the 4 or 5 cent difference is not worth my hour or two of time to figure out where those pennies went. QuickBooks is just going to put those pennies into an expense account called reconciliation discrepancies. And it's a pretty small amount to be off by. But naturally, if you're dealing with thousands and thousands of dollars, then you want to get to the bottom of that. So I'm going to go ahead and finish now. Now we've reconciled our account. And it tells us that our balance due for this account is $102.34. If you want, you can pay all or a portion of the bill now, or enter a bill to pay later. Here's the thing. I don't like bills with credit cards. I don't like any of this. I'm not going to do it. What I'm going to do is instead, if I'm using online banking, I'm just going to download it. Whenever I actually pay that credit card, it's going to get downloaded as a payment, just like we saw earlier. We don't need to enter anything manually. And in fact, if I did enter something manually, it could throw me off even more. Because if I enter a bill for $102.34 and then I don't pay all of that bill, QuickBooks isn't going to have an accurate accounting of my credit card balance. And I'll show you why. I'm going to click Done here. So again, usually I'm just going to download my payments. They'll just show up here. I don't need to record anything manually. But let me show you the problem that happens if you use bills. And I'm going to go against QuickBooks' advice here and not use bills. I like bills, but I don't like them for credit cards. So right here, QuickBooks thinks we owe $576.09. That's fine. The balance that you see here for your credit cards and your bank account balances is not always exactly what it is on the most recent reconciliation, because the reconciliation tells QuickBooks what your balance was as of whatever the date is on your statement. In our case, it was 4/13/2021. There have been plenty of charges since that date, and potentially even payments since that date. So that's what this account is reflecting. It's reflecting the fact that there were more transactions since then. That's okay. If I were to enter a bill for this, so if I go over here to bill and I put in Chase and I put in my credit card and I put it in for the dollar amount that I owe, and then I put in the bill date, which would be 4/13/2021, and I need to pay that by 5/10/2021. If I put that in, it's going to make it look like I owe less money on my credit card balance. So it makes it look like I've paid it down, even though I haven't. A bill is not a record of you paying something. A bill is a record of you owing something. Well, the credit card already tells me what I owe. I don't need a bill on top of that to tell me what I owe in addition to the credit card. And here's another thing that happens that's a problem. If I go in to pay that bill, or if I download a partial payment, it might not even download correctly. Maybe I only pay, $60 on that bill, right? So I'm going to put in $60 as my payment. I'm going to save and close it. Notice that when I pay that $60 and I go to look at my credit card balance, it doesn't affect my credit card balance. It affects the bill from my credit card. Whenever I get my next credit card statement, it's going to tell me that I owe $473.75. Actually, it's going to tell me more, because it's going to tell me this number plus the open bill, because I made a partial payment. It's going to tell me that number plus the $42.34. So I'm going to end up entering another bill, and that's going to put me into the negatives for $42.34. Actually, it'll be more. It'll be more like 60. It'll put me into the negatives on my credit card balance on my chart of accounts. If I go over here after entering that other bill, it'll show up as a negative on here. I just got to find my credit card. I didn't enter the bill, but it would show up as a negative amount. I don't like bills with credit cards. It throws everything off. You're recording the same thing in two places. Why bother? Just record it in one place. Just keep the credit card balance. That's what that's for. So we don't need the bills. We don't need the bill payments. It's extra work and doesn't give you anything. And in fact, actually throws you off. So I'm going to delete that. And then I'm also going to delete the bill. Perfect. I don't need those things. Right. There we go. That's what it should be. Let me review my notes really quick to see if, hold on. I'm trying to see if I had any other comment. Oh, I do want to cover one last little thing, which is the possibility that some of you may want to track the individual credit cards for an account. And I wanted to show you how that can be done. So, and this can be done. It's just a little bit of extra work in some cases. I'm going to go ahead and set up a hypothetical here. I'm going to put in my credit card, and let's say that I have oops, I can't spell today. There we go. So I'm just going to give you an example here. If you want to choose, if you choose to have a single credit card account that you then track the individual credit cards into QuickBooks, or you can. I want to show you the method to do that, but then also show you a little bit of downside and how it can sometimes lead to problems, but it's not all bad. It's just a little bit of extra work in some cases, but it might be worth it for you. Now, if I were to set this up as a parent with sub-accounts, naturally, I'm not going to actually name it Chase with individual cards. I'm just naming it that way for teaching purposes, so it'll stick out on our chart of accounts. So if I do that, and then I go in and I set up the individual cards as sub-accounts. So I'll put in Chase with individual cards as the parent. Okay, I'm going to put in another here. Basically, we would create a new credit card account for every one of the cards, and we link them all to the parent. And in doing this, whenever you go down and you look at your credit card account, you can see the parent and then all of the individual cards underneath it. Now, the cool thing about this is that whenever you download a transaction or enter it manually, and it's assigned to the individual card, you can see that it came from that card. And then save a new. Put in another transaction. I'm just doing this to show you how they cooperate with each other. So doing it this way, we can see that $100 came from this account, $50 came from this account, and it all feeds into $150 owed total on that credit card. So far, so good, right? We're able to track those individually, works out fine. Now the payment to this credit card doesn't go to the individual cards. It goes to the account, because usually in situations where you have multiple cards for one business account, you'll get a statement for all of the money that's owed across all of the different credit cards. So whenever you pay it, you pay this account. And that's really the only way to do it accurately. You could try to break it down to the individual cards, but that gets really difficult over time. So paying down the credit card, you would choose the base or the parent, the dollar amount that you paid, even if it was a partial payment, and then the bank account. Now, of course, again, you can download these transactions, but I don't have this downloaded, so I have to enter it manually. Now, when you enter that payment, notice that it brings the parent down, but it doesn't affect the sub accounts. What happens is over time, these just go up and up and up and up and up, and this stays, at whatever the actual balance is. So you basically never pay attention to these individual accounts. You would just look at this one for the actual credit card balance. And again, not bad, because it's still accurate. And if you go to run a balance sheet, you'll actually see on the balance sheet the overall balance right here of 0. And you'll see all of the payments going into the parent and then the individual cards. The parent will continue to go down forever, and the individual cards will go up forever. And there's really no way to do it any differently than this. This is how it's done. The only way you could fix this negative number and positive number if you were to do a journal entry to move this balance over into these balances, or vice versa. And you could, but if you're making partial payments, it's hard to know how much of this payment goes into each one of these cards, especially if you're dealing with years and years worth of data and you're making partial payments and you carry over a balance from month to month, like how much money is really going towards one card versus the other. It's like, that's not really how the credit card works. So again, not wrong. It just leads to weird numbers on the balance sheet. And it might be worth it for you to go through this extra detail to end up with those weird numbers, or it might not. For me, most cases, it's not worth it, but it might be to you. If you do go this route, there's no need to reconcile the individual sub accounts. What you would do is whenever you go to reconcile the account, you would just reconcile the parent account. You would choose it, put in the ending balance, put in the ending date, whenever that happens to be. And what will happen is you'll see all of the transactions for all of the individual sub accounts. And as you look at your bank statement, it will include all of the transactions for those sub accounts, and you simply check them off. And that'll reconcile the parent. There's no way for you to ever reconcile the sub accounts, because for one thing, you don't get statements for the sub accounts, so there's nothing to reconcile against. But also because the payment is in a different account than the account that the charges were entered into. So you just can't do it. Again, not a downside. It's just guidance on what to do in the event that you've chosen to go this route with the parent and the subs. I just wanted you to know how that would happen, or how you would reconcile if you decided to do that. And that is it. Those are the best practices for credit cards on entering those on a daily basis and setting them up.